Welcome back to Alpha Recap, your quick take on the market's big moves. We're glad you're with us after the close. As always, if you have questions, you can reach us at stockalpha.ai.
Hey, great to be here. Big data unpack. Markets close with a pretty broad risk-on vibe, and there's a lot to dig into.
Totally. Okay, headline first, and then we'll peel the layers. The S&P 500 exchange-traded fund finished the day up about 2.5%. The Nasdaq-100 exchange-traded fund jumped almost 3%. And the Russell 2000 exchange-traded fund was up roughly 3% as well.
Big move across the board. So, what really stands out here is that it wasn't just one corner of the market leading. Tech, small caps, and even renewables-linked utilities all played a role.
Right. It felt like a confidence trade. After a choppy stretch, traders leaned back into growth and cyclicals instead of hiding in defensives.
Exactly. And there were three main drivers that folks pointed to today: positioning and momentum, company news flow, and continued market pricing that peak Fed tightening risk may be behind us.
Let's take those one at a time. Positioning first. Algorithms and momentum strategies chased large-cap tech, and that energy spilled into smaller names and cyclicals.
Yeah, that tracks. Momentum can be self-reinforcing. Once big tech started to pop, it pulled a lot of liquidity along with it, which then helped the small cap rebound.
I mean, when you step back and look at this, that kind of spillover is classic. Large cap strength loosens up risk appetite, and that trickles down.
Corporate news was the second piece. A stream of earnings, filings, and updates gave traders fresh info to reweight positions, especially in semiconductors, industrials, and some parts of tech.
And that matters because even if there wasn't a single blockbuster report, a bunch of smaller confirmations can add up and remove uncertainty.
The third piece is Fed and macro expectations. Traders have been moving toward a lower for longer policy view as recent inflation and wage prints moderated. That helps support higher multiple growth names and longer duration assets.
So it's less about a single Fed comment today, and more about the market's evolving interpretation. That peak hawkishness might be behind us, which, to be clear, is a conditional read, not a guarantee.
Right. Analysts note that if inflation or the jobs data surprise on the hot side, that narrative can reverse quickly.
Okay, let's talk sectors, because this was not a narrow rally. Tech led, but there were other strong areas too.
Technology and communications were the big headline. Large-cap software and semiconductor-related names led the charge, helped by friendlier analyst commentary and bumped-up expectations.
And communications and media bounced too, which amplified tech's move. But small caps and industrials also showed up. The industrial bounce suggests order flow wasn't as weak as some feared.
So, small cap strength is notable because it signals a return of cyclical appetite, not just a one-off big tech rally.
Utilities were interesting. They tilted toward tech-linked gains. Solar, storage, and grid modernization names drew money, which shows how sector labels are evolving as utilities adopt clean energy tech.
Materials and mining were up too, on renewed commodity interest. That fed into the cyclical story as well.
Energy was a bit of a split screen. Traditional oil and gas names were mixed, while renewables and storage-focused energy plays outperformed, helped in part by some geopolitical headlines.
Financials were mixed. Smaller regional banks had some positive stories around loan performance, but big banks were more sensitive to interest rate positioning and margin implications.
And then there was a surprising bright spot: cannabis. Regulatory optimism and a cluster of company-specific updates pushed that sector higher, even if it's still volatile.
Always an interesting sector. Volatility and headlines go hand in hand there.
Short reactions here. Big move.
Nice breath.
Not what anyone expected.
Now, on the company front, a few names got attention and helped drive sector flows. onsemi stayed in focus after its fourth quarter review and guidance commentary, which supported semiconductor peers.
Caterpillar caught some eyes too. Its decision to maintain the dividend resonated with income-oriented funds and helped steady industrials.
Then you had a flurry of 8K filings and corporate updates from companies like Lumentum, Nurix, and Regeneron. These filings often trigger short-term repricing, as traders reassess guidance or pipelines.
And smaller names, Sotera Health and Nicolette Bankshares, got fresh coverage that pulled money into those niches. Analyst write-ups can move less liquid names quickly.
There was also a disclosure that a big manager trimmed its position in an energy company, which sparked conversation about active manager positioning in the sector.
All of that underscores a broader point. Company-level disclosures can create short-term action, but analysts note you have to read them in the context of longer-term fundamentals.
Let's touch technicals and market internals. Breadth improved, advancers outpaced decliners, and volume-weighted momentum favored tech and cyclicals. That kind of participation is constructive in technical terms.
Expanding breadth reduces the risk that the rally was just an index-heavy move. But momentum indicators can overshoot in short windows, so traders will be watching for follow-through.
Yeah, absolutely. The next session matters. If we get continuation above recent resistance, that suggests a more sustainable shift. If not, it could just be tactical profit-taking.
So what are the things to watch tomorrow? Earnings and corporate filings, Fed speakers and rate expectations, and macro prints on inflation and jobs.
Also, keep an eye on sector-specific catalysts, solar and storage project awards, industrial orders data, and any geopolitical headlines that affect energy supply.
And remember, today's optimism is tied to the market pricing a lower terminal policy rate and a longer runway at restrictive but stable policy. That's a key sensitivity. Hotter inflation would flip the script fast.
Investors and traders should also note the bifurcated nature of the rebound. Large-cap tech led the headlines, but strength in small caps, industrials, and materials suggests a broader rotation rather than a narrow rally.
So, final takeaways before we wrap up? First, Thursday's session was a broad risk-on rally with shared leadership across tech, cyclicals, and clean energy-linked utilities.
Second, the move was driven by momentum, company news flow, and shifting Fed expectations toward a lower-for-longer pricing. Momentum indicates short-term risk appetite has improved, but macro data remains the primary risk.
Third, watch for follow-through. Analysts note that confirmation from earnings, inflation prints, and Fed speakers will determine whether this turns into sustained leadership or a tactical bounce.
And a quick reminder, all of this is informational. Analysts note market dynamics and data, but this is not personalized investment advice.
All right, that's our recap. If you want to dive deeper into any of the names we mentioned or the sector flows, head over to stockalpha.ai.
If you have questions about anything we covered today, head to stockalpha.ai, where you can ask us directly and we'll answer live. For more market analysis and insights, visit stockalpha.ai.
Thanks for listening to Alpha Recap. We'll be back after the next close with another rundown. Take care.